Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Start of a fresh new week. Lots of news over the weekend, and this is the week where we kind of go into that 1st of August trade deadline as well. So enough and more to track. Single stocks, top down, everything coming up here over the next 2 hours or so. I'm Prashant. With me, my colleagues Nigel and Surabhi. Good morning, guys.
Hi guys, morning. Nigel, not Monday blues. It's a nice blue shade actually. But the deals are coming, guys. I mean, they're coming thick and fast. They came in for Asian trading partners last week. Now they're there for Europe. Where are we? Let's see.
Hopefully it's something in the offing for us. But guys, before that, the sporting action over the weekend. India going ahead and saving the test match. I'll tell you what, yesterday at around 4 p.m., one would have thought we're getting knocked back. But good fight coming in from Jadeja as well as Washington. Feeling good this morning. Hopefully the Bulls get some kind of inspiration as well and fight back, because as of now, things look a little bit jittery.
Yeah, absolutely. And they've been a little blah in that sense, right? I mean, global markets have been doing well, but here things have not really looked all that exciting. Let's just start from the beginning, right? In terms of what you need to know as we begin a new session. I'll start with India first, and we'll get down to the other stuff. So government sources tell CNBC TV 18 that all options remain open in the ongoing India-US trade deal. Now, the reason I'm putting this right up front is because so far, what we know and what was kind of sort of what we were picking up is that a deal, an agreement before the 1st of August is unlikely. The US team will be in India post the 1st of August, and then there'll be more discussions, etc., and it'll be taken forward. So maybe by September, October, November, later in the year. But this is new information, which we picked up, all sources, of course, but over the weekend, that interim deal before the 1st of August is not ruled out, even as the larger bilateral agreement is negotiated. It's continued to be negotiated. Remember, I would kind of sort of think that yes, I mean, interim agreement more likely than not before the 1st of August, because, I mean, think about it. There is the base tariff of 10%, and then, of course, the 26% tariff, which was handed out in April. So cumulatively, you're talking about a 36% kind of number. And nobody knows what's going to happen on the 1st of August, but, I mean, is that the number we are looking at? I mean, certainly that is something that we'll try and avoid. So perhaps an interim agreement before the 1st of August, and then I guess talks continue as sources tell us about the bilateral overall larger agreement. Now, this is, of course, in the works right now. The new thing which really sort of took shape was the US-EU trade deal, and this came through on Sunday. And it was announced, done and sealed. So 15% across the board tariffs on European exports into the US market, including automobiles, apparently. And this is important. So Europe pays 15% for everything it sends into the US, but vice versa, there isn't very much. I'm seeing a lot of commentary, etc., which says this is bad for EU, they're getting a raw deal, etc., etc. But think about it. This is not very much different from the 10% which was announced early on, which markets were working with. And then if you had added sectoral tariffs on things like autos, pharma, it would have gotten up to about 12, 13%. You're getting a 15% all-inclusive deal for EU. So, it's all relative. It's not absolute. So in that sense, I wouldn't say it is too bad at all. Of course, EU has agreed that they're going to buy energy, a lot of US energy, a lot of US gas and oil. They want to anyway sort of wind down their reliance on Russian energy. So there's some big number which has been sort of put out. There's also talk of military equipment purchases from the US, which in any case the EU would have had to do if they want to bolster their defenses and contribute more into the NATO. So that is one. That is US and EU, and that's a large agreement. With regards to China, there are reports. The South China Morning Post has said that China and US will pause tariffs for another 90 days. So this is what came through. And the US Treasury Secretary Scott Bessent is meeting his Chinese counterparts over today and tomorrow for talks to take this forward. And we'll, of course, see it in Stockholm. So we'll see what comes out of it by the end of tomorrow when these things happen. Busy U.S. week ahead. FOMC, the Fed decision is on Wednesday. The consensus is for no change. Lots of US macro data ahead. I mean, ADP, PCE, GDP, NFP. So, it's really packed, leading up, of course, to a crescendo with the US jobs data, monthly jobs data. Numbers continue to come in. 33% of the S&P in the US has reported earnings. Another 37% will report over the next 5 days. And this includes tech-heavy names like Meta, Microsoft, Apple, Amazon. And by the way, US earnings so far, what we have gotten, about 60% of companies have beaten earnings per share expectations. So it's a pretty good earnings season in the US so far. And of course, on the back of it, US equities have continued to make newer highs. I mean, the S&P has, by the way, has made 14 closing all-time highs this year. So it's an absolutely phenomenal run that the US is seeing, even as markets here are not doing all that well. And yes, last week was a case in point. Never once did it look like the market is going to sort of break out. I think one day, it was Wednesday, where there was a bit of a flurry of excitement that quickly fizzled out, and the market, of course, ended lower. So I'll just end with levels here. So for the Nifty, on Friday, the Nifty closed below the previous low, the prior low of 24,882. So the next, on daily charts, the next support comes in at 24,773. So we'll see if that comes into reckoning, but that's about 100 points away. The Nifty Bank, mind you, managed a positive weekly close. So supports here, 56,395, which is the 40-day exponential moving average. The next support is 56,204. Resistance here comes in at about 57,316. Very, very near-term levels is what we're looking at. GIFT Nifty is indicating, I think, a flattish kind of start as we begin this trading session, about 8.5 odd points lower. Surabhi.
Okay, well, we've got plenty of trade talk and plenty of earnings to go over. It promises to be a very, very busy Monday. US futures actually are up between about 0.3% to 0.5%, depending on which index you're looking at, because of the optimism around the deal with the EU, which has finally come through. Now, Asian markets, they're trading mixed this morning. There's some profit taking in Japan, because remember, that was the market of the week last time around after the Japanese trade deal. So there's some profit taking in Japan. But the Chinese markets are doing very well, both Hong Kong and mainland China, because the markets believe that they're perhaps next in line. By the way, not just the trade, tariff level itself, China's purchase of oil apparently is also going to be discussed at that meeting, which kicks off in Stockholm today, which Treasury, which from the US side, Mr. Besant is heading, and the Chinese are present as well, of course. The dollar has been soft all through last week, and it continues to be fairly soft this morning as well. Last week, the dollar index fell about just under 1%. This morning, again, we're getting very flattish cues there. It's trying to find some stability. Now I want to talk about the cues that we have here, and it's earnings. And I'm sorry to say this, but the banking earnings, at least, are not inspiring too much confidence. Kotak Mahindra Bank. Now, what is common across the board is asset quality issues, some rise in credit costs and margin compression. That's a common thread across most weekend banking earnings. So Kotak Mahindra Bank, provisions up, credit costs up quite sharply, especially quarter on quarter, and the margin has declined 32 basis points. The market was working with just 20 basis points of a NIM compression, so not looking that great. Look at Bank of Baroda. The net interest income itself is down, both sequentially as well as year on year. The rise in provisions, they've doubled year on year. And even sequentially, they're up almost 30%. So again, that's a concern. And again, slippage is slightly higher. So asset quality woes. Look at SBI Card. The rise or the credit cost itself is at a 16-quarter high. SBI Card was, guiding for a gradual decline in credit cost just a couple of quarters back. This quarter has been a bit of a, negative surprise over there. You have Shriram Finance, however, and we'll be talking to this management as we go forward. And at least here, there are no complaints. The numbers looking very, very, solid. In fact, improvement in asset quality, fall in credit costs, and the AUM growth looks solid at, almost 17% growth coming in. So at least that's good. However, while we're dealing with banking woes on one side, there is IT, and there's no good news coming in on IT as well. TCS, look at what it said over the weekend. It will be reducing its global workforce by 2%, and this could be impacting mid to senior level positions quite a bit. So let's see. And they're, of course, attributing it to, structural changes, AI, etc. But this becomes an important talking point. Basically, expecting support from tech, may not really work through. That's the short point. Nifty already at a 1-month low. And we've had 4 consecutive days of weekly declines, including the last week that just closed out. The index, of course, has fallen, below a lot of moving averages, including the exponential moving average, the 50-day. The FPI selling, now again, here on a daily basis where it's negating, DII buying is being negated by FPI selling. The net sell figure is actually not looking too big for July. But you have to, factor in that they're coming in through perhaps the block trade transactions, but still there's a net sell number of 6,500 crores. On Friday, we're talking about FPI selling of almost 2,000 crores, domestic buying of about 2,140 odd crores. So FPI selling continues to be a worry. Finally, earnings, I named quite a few of the banking ones. In addition, IndusInd Bank today comes out with numbers. The company's CHRO resigned over the weekend. Watch for this one. And there's BEL from the Nifty as well. So busy Monday coming up. Nigel.
Well, that's right. The Nifty is seeing a bit of subdued action right now. And in fact, this correction that we have seen, or this mild pullback we've seen, is on lack of volumes as well. So we're not falling on very, very large volumes. What the market is lacking is a positive trigger. As you said, earnings have been pretty subdued. Whether you look at Kotak Mahindra Bank, Shriram Finance, Bajaj Finance, throw in there Zen Technologies as well. Earnings that have been reported till now has been a little bit subdued. We're waiting for clarity with regard to the United States-India trade deal. That's not really come about. So that's an uncertain event. Once that comes about, whatever it is, that uncertainty will be behind us. And tech, we've been talking about this. Maybe, in fact, the street was more focused on buybacks, bonus, etc. But the innovation, the focus on innovation seems to have lacked a little bit. And now this employee cut will weigh on the tech space. So we're lacking a positive trigger, which is which are the reasons why, in fact, we have seen that the markets have been subdued. Moving on then, the Nifty as well as looking tactically a little bit jittery. Because as we were saying earlier, well, we ended lower for the fourth straight week. And now we are, holding in that vicinity below the 20 DMA. So the structure seems to be broken a little bit. And we need to bounce off somewhere over here. Otherwise, we're staring at around 24,000, which incidentally is a 200 DMA. What about the FI action? Well, that as well has been a little bit subdued. They have been adding shots as well. But the big cue this week is going to be the US Federal Reserve. Their rate action is in the next few days. And that could be a global trigger that we are going to be waiting by for. Technical factors, though, are gradually sliding towards the oversold levels. And, that could be a factor that the bulls will track closely. The Nifty RSI currently come down to around 40. A couple of months ago, it had gone to around 65. So that's cooled off. But at around 30, that's when you say that it's in an oversold territory. So keep an eye out on that. FI net shots, highest since March. And the Nifty PCR, well, that's come down to around 0.7. Let's dwell a little bit onto the last two. In Friday's trading session, we ended lower. The FIs went ahead, they added short positions, more than 14,000 contracts were added, and they remain net short with 86% of their positioning on the short side. The PCR as well, that's come down to around 0.7. We started the week last week, in fact, around 1.1. And that's because call writers are now feeling very, 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 confident. 24,900, 25,000 call. Both of them saw a good amount of open interest build up. While on the downside, this 24,850 put, well, that saw some build up. So which brings us to the levels. Now on the upside, since you're going by the writing that you're seeing at around the 25,000 odd mark, this 25,000 zone will be a bit of an, an important mark that we'll be looking at. So we'll have to keep an eye out on that. That's where the resistance comes in at. And in fact, the 200 AMA is going to be the important mark as well. This number is actually around 24,725. That's the important mark you don't want to breach on the downside, 24,750. Moving to the Nifty Bank, well, the chart should come up with you with the 20 and the 50 DMA. We're still holding about the 50 DMA. You don't want this to get breached on the downside. The stock that I'm looking at, because of the deal that the United States and Europe have tied in, Tata Motors, they have a plant in Slovakia. The Discovery as well as the Defender are sold out of there. And because of that, because of this trade agreement that has been signed, I think Tata Motors will be in focus. Earlier, the US, UK signed a deal. Now Europe as well has been included. So that could be one of the stocks we'll track during the course of the day.
Okay, all right, got it. Nigel, thanks very much for that. So a lot of stocks and, of course, cues on our radar.